Dan, it's great to have you back. Is this bill definitely done for?
Yeah, let's parse the language out pretty clearly. The bill that passed the House of Representatives in the month of November is now dead. That bill is very, very unlikely to come back. The big question that market participants are having today is that will the Democrats' leadership accede to the structure that Joe Manchin has been advocating for in a consistent manner since July? That means that if this bill is going to cost $1.8 trillion over 10 years, it has to cost $1.8 trillion over 10 years. It can't be a program for 1 year and another for 3 years and another 5 years that equals $5 trillion over 10 years, disguised as $1.8 trillion over 10 years. And I think there was a great hesitancy all year, and in particular over the last couple of weeks, to accede to one Democratic senator. Now Democrats understand what the realities of a 50-50 Senate. One person sets the price. That person is Senator Manchin. And I do think the Democrats are going to try and figure out a way to make this bill a much smaller and more focused bill, focused in 3 or 4 areas, most notably climate change, health care, and the child tax credit. And you take all those other programs and they're just not getting through. Now, that's easier said than done.
Right.
There's a lot of constituencies that were looking forward to getting that money that are going to have to be told no. So I don't want to make it sound easy or guaranteed, but that's the process the Democrats are going to have to go through over the next couple of months. And it's not going to be something that happens quickly. It reminds me a lot, Kelly, of the Affordable Care Act. After Scott Brown won the Massachusetts Senate race, it took the Democrats' 16th vote away. It took Speaker Pelosi about 10 weeks to come up with a way to pass a bill, even though they had lost the 16th vote in the Senate. Very similar to today.
So maybe your message to those core sectors is the sell-offs today could be buying opportunities if they come back with something on that front. Although, again, this isn't so much, I think, about individual industries as it is about the impact to GDP. And there are plenty of economists saying we had all this stimulus going into the economy the past couple of years. Now we've got very little coming in 2022. You know, I do wonder about the impact of that.
Kelly, we are facing the largest fiscal drag in 2022 since 1947, related to the drawdown of World War II. We have just never seen something at 8% of GDP. So this helped plug some of that gap. It was about 0.6. So it got you a little bit of the way there. But we were going to have a fiscal drag no matter either way. But I think it's very important to know what's going to drive that stimulus in 22 that the economists are downgrading from. And that's the loss of the child tax credit, which will expire at the end of this year. My sense is there's enough political support, if everything fails, that they can come back and at least get another year out of the child tax credit. And I wouldn't be surprised if he got some Republican votes for that. So I think this is a bit of a knee-jerk reaction. But the larger story today is that we're dealing with Omicron and the Fed tightening and more fiscal tightening, and that's created some anxiety for voters. Once the dust settles on this, once we get into next year, it will become a lot more clearer. So today's a bit of a knee-jerk reaction in that front, but clearly what the Democrats were trying to do all year won't happen, and it will be a much more slimmed-down version if something is to happen.